This is the weekly review for the week of May 22nd to May 26th, as well as this week's Sunday preparation. So, coming into the week, I was anticipating a bullish week. I was looking at this fair value gap here coupled with the breaker, and I was seeing if um, Tuesday or Wednesday could make the low of the week in there and push up to take this buy side or the February monthly high. So further, I was anticipating that Monday was going to be consolidation because we didn't have any news, and then Tuesday or Wednesday would raid Monday's low into that daily fair value gap to make the low of the week. So Monday, I came in with the bias of just a consolidation profile, and I was looking for price to return to the new week opening gap. And we got a setup at the 9:30 open, so we had the displacement up, which is, and that first displacement is typically the Judas swing, and we went above the 8:30 price, so that opening price. So we rated that and went into a premium relative to New York price, broke market structure to the downside, and then I was looking for an entry in here, but we only had very shallow retracements. We only came up pretty much like one tick into this fair value gap here, and we didn't even come up into a premium. And then here we did come up slightly into a premium, but I was watching the 2 minute chart, and the entries were only available on the 1 minute chart, so I wasn't able to get in on this move down to the new week opening gap. Also taking out these equal lows in here, but the bias played out pretty nicely, so I noted that in my journal. And then for the rest of the day, it was pretty much just consolidation, and nothing else really gave. So there was no news drivers on Monday, and that's why we saw this type of price action. So there was really only this opportunity for Monday's trading. Then Tuesday came, and I was watching Monday's low and also this hourly order block. This one right here, which eventually became a breaker. But we had the daily fair value gap and this order block on the hourly chart kind of nested together in here. And I mapped out previous day's low, and I was seeing if we could raid that and go higher. But there was no bullish price action of any kind printed on Monday, or on Tuesday rather. So literally nothing happened in the AM session. It was just consolidation. And then we got the first sign of displacement um, in the PM session during lunch. And we started respecting bearish PD arrays. We came up into the M5, M15 for Valley Gap here and had displacement down. And I noted in my review for the day, because I wasn't watching the PM session live, but I think one of these would have been a good opportunity, because here we broke down and violated this this one right here. That's the hourly order block. And at the same time, we also violated the daily fair value gap right here, this one. So that was kind of like the invalidation for the bullish bias. It shouldn't have violated those lows, that fair value gap low or the order block, if it was going to go higher. So that, coupled with the fact that we've been respecting this bearish PD array, You could have gotten in on this multiple time frame and efficiency based on this setup, but if you wanted to wait for more confirmation, and that's why I like these two M1 setups, we came up, had a SMT, hit the order block inside this fair value gap, and got that displacement down in these two M1 entries here. So I really like these two setups because there was just so much confluence here, and there was nothing bullish about this at all that you could have been kind of tricked or whatever. There was no bullish setup in here at all. Everything was just printing bearish, and we violated again those two key bullish PD arrays, the order block, the fair value gap, and also we're having displacement away from that new week opening gap. So that's why I think these two M1 setups here were pretty high probability, and I noted those in my journal for Tuesday's price action. Then coming into Wednesday, I didn't note anything down for Wednesday because I didn't see any model form. But because we violated, so coming into Wednesday, because we violated those bullish PD arrays, I was looking at previous week's low. So this one right here, this previous week's low, as well as these relative equal lows just below that previous week's low as the drawn liquidity coming into Wednesday, since we again violated that. I was also watching the breaker to see if we could dip into that. But on Wednesday, price remained extremely heavy, and we didn't have any Judas swing above the 12 a.m. opening price, right? We opened here, couple handles up, and then just straight down. But there was no YouTube model in here. 9:30 open just opened and then went straight down to take the drawn liquidity, and then we consolidated. Now I noted this setup in the last hour of trading, where we had this SMT, respected this M5 order block, had displacement up. The only thing is that if I were to have taken this, I would have cut this at a loss because we didn't move until after 4 p.m. So I probably would have cut this at a 50% loss roughly here. But the setup did end up playing out after the 4 p.m. session close. So I noted that in my journal as a loss because this was even though it wasn't the cleanest raid, we still had that displacement up, and after taking previous week's low with a SMT, trading back up into the range of the day. But for me, I still would have considered this a loss. Then going into Thursday's trading, I was still bearish because we had those equal lows still untapped that were so close to this previous week's low. So I was seeing if Thursday was going to print some type of bearish price action, and I noted how we formed a new daily fair value gap, this one right here, on Tuesday's candle. So there's Wednesday, Thursday. I was looking for price to dip up into that daily fair value gap to take us to these equal lows down here. And I saw that we had previous day's high here. So right above previous day's high is that daily fair value gap. And we also have this daily breaker here. I wanted to see if we could dip up into it. But initially, we took previous day's high with a YM SMT and then had this displacement down. And created the YouTube model. Now, when I saw this live, it wasn't super clean to me for a few reasons. One, because the raid was so shallow. It was just like a couple ticks. And also the range was for your stop loss was 11 handles, and that was quite large. And price ended up consolidating after coming up into a premium. So I really didn't do anything here because I wasn't sure what was going on. I noted a couple M1 fair value gaps. I was also noting this one here that you would have been stopped out on if you took a short. This one would have given you the 5 handles, but then we ended up having a reversal, shifting market structure here and respecting these bullish fair value gaps. Now, ICT talked about this in his most recent video, saying that it was because he was looking for this buy side up here to be taken. Right. But one of the things that has me confused is that if we already took this buy side, significant buy side, because this is previous day's high and had a SMT and had this displacement down, I feel like this could have easily already just ran lower and we didn't have to come up to take this buy side up here. But we ended up breaking market structure here, respecting these bullish PDRAs, came back down into the order block, and then rated previous day's high deeper than this shallow retracement. And here in the last hour of trading, I took this short setup after we rated previous day's high deeper with SMT, came into the breaker and fair value gap here, and I got stopped out. And I noted that we ended up retracing into this bullish fair value gap and order block here. And if you look on the M1, we did have a setup on that, but it wasn't the cleanest break in market structure. So this was between the PM silver bullet hours. This little low right here, like I wouldn't have even noticed this market structure shift live. I was just looking at this low. If we had broken that low here and then came up to that fair value gap, I would have taken that. But this entry here for the PM silver bullet did give more than a 5 handle run. So I felt that this was pretty sloppy for the end of the day, because if we already made the high of the day here, this should have ended up retracing into the daily range. But that's what I noted for Thursday. Then Friday, I started looking at ES, and then I ended up switching to Euro because I just looked on the daily chart, and despite this movement that we had, we're still in this like several month-long consolidation. And ES is still moving in tandem with DXY, which is not clean at all, right? Euro came up into its daily bearish fair value gap and sold off, as we would expect with the inverse correlation between EU and DXY. But ES ended up just ripping right through it. So I have no idea why it did this on Friday. And I couldn't identify any model or anything to enter on. So I didn't do anything anyway. But EU for me was very clean on Friday because we had this daily fair value gap in here that we traded up into. Right? Same thing for ES. This is how ES should have reacted. Came up into the daily fair value gap, we took previous day's high, and we also formed equal highs with previous day's high. There's this H1 breaker, same thing in ES. We displace up and have the Judas swing at 7 a.m., so early New York. We come down here and we violate this M15 Fair Valley Gap. We close below it. We also close below the mean threshold of this M15 order block. So everything is bearish here. We have equal lows resting below here. So the confluence for bearishness, there's like 3 or 4 things that is signaling bearishness. We have a Fair Valley Gap in premium, comes up into premium, right down to the equal lows sell side. I felt that this was super clean here, right? While DXY on Friday is going higher. Meanwhile, ES is going higher with DXY, which makes no sense. So then we got a second Fair Valley Gap entry here in premium. This was the silver bullet window, but my preference would be this one because the equal lows had yet to be taken, where this entry here during the silver bullet window was after the equal lows were already taken, but it did end up dropping to previous day's low to make the low of the day at London close session. So very nice price action on Euro for Friday. And really I took a look at Euro did a high time frame or top down analysis on Euro, and I think I'm going to look at Euro this week. So we still have a bearish bias on dollar index, or a bullish bias on dollar index. And I noted this March swing low here, monthly swing low, which is also equal lows here. So we also have this SMT, and right now coming into the next week, I'll look for price to come down into this weekly order block and weekly volume imbalance here. There's also a daily volume imbalance or FVG. It depends on which price feed you look at. If you look at forex.com, there's a Fair Valley Gap in here. But if you use FXCM, it's a volume imbalance. But this, the top of this volume imbalance is basically the top of the weekly order block. And then I noted the mean threshold of this daily order block here. And I also noted how the previous 20-day low got cleared, and this monthly low is also, and equal lows is also the 40 and 60-day low from the seasonal shift here that happened in the beginning of May, where the seasonal tendency suggests that we're going to shift bearish. So I'm going to watch for a bearish week this week. And we do have a decent amount of news. It is an NFP week, so we should not trade beyond Wednesday's New York session. But Monday there's nothing because there's a bank holiday. So it's going to be a very truncated week. EU, there we go. With Tuesday we have high impact news, potential high of the week there. And then Wednesday also high impact news. And then beyond Wednesday probably should not be trading. So I'm going to see what Tuesday and Wednesday offer us for Euro this week. So I'm going to look for lower prices into that weekly order block. So we'll see what happens.